Frank Curzio here with another live video. And I always say this, love your feedback, frankcurzioresearch.com. And sorry for the late video tape, been really crazy at work. But I want to talk about the FANG stocks because they're getting a lot of attention. A lot of people think the market is doing better than it is. But when you look at FANG, for those of you who don't know, that's the largest technology companies. It's Facebook, Amazon, Apple, Netflix, Google, and people throw Microsoft in there as well. If you take those stocks alone, you're looking at 23% of the S&P 500. So if you're looking at money managers, money has to flow someplace. Otherwise, they don't generate fees. And a lot of money is flowing into these stocks, and they're saying FANG's the best stocks. These are where you want to be. To put that in perspective, that 23%, uh, the energy companies represent about 4% of the S&P 500, less than that. So you're seeing all this money go into it. It's pretty crazy. And you have to be careful because not all these stocks are the same, right? So you're looking at Facebook, right? Facebook and Google. Google just came out today and said Google themselves are cutting their marketing budget. I think they said by half. That's every company across the board. They're all cutting their marketing budgets. They're all cutting CapEx tremendously. Right now, they're preserving capital, right? They're laying off employees. So you have to be very, very, very careful about those. You're looking at Apple. I mean, Apple came out and said, we have no idea what we're going to earn. I mean, they're talking about $100 million buyback when everybody's not. You're going to buy back your stock at 27 times forward earnings. Remember, Apple didn't generate earnings year over year. They saw earnings and sales decline from 19 to 20. And it was supposed to see incredible growth for 20, 21, and 22. And now that's pretty much wiped out. So, you're looking at a lot of crazy things here. But for me, the worst acronym in the world, guys, you can kill me on this, but MAN, MAN. I mean, you're looking at Microsoft, Amazon, Netflix. Those are totally different companies than the Facebooks, Apples, and Googles. And Facebook, yes, you're going to see users go up. I'm using more Facebook. Everyone's doing live videos from every place, but they're not spending money on advertising. That's how they make money, which means their earnings aren't going to grow as fast. So there's got to be a separation here between these companies. They're all going up at the same time, but there's a big difference between Amazon, Netflix, and Microsoft compared to Facebook, Apple, and Google. So be very, very careful out there. Advertising budgets are being cut a ton, which is not going to be good for Google, even though that's online. And again, a lot of people are just worried about keeping their employees, what's going to happen the next year. There's so much uncertainty out there. They're not going crazy to market. Why? Because people are closing their wallets right now. So even if you're marketing, they're not really going to spend a lot of money right now. People are scared. They're just getting their checks. They're worried. They're on unemployment. Yes, they're making more money than they made when they were working, some of these people, which is crazy. But these aren't the safe havens that everybody believes. Be careful. They're trading expensive valuations. They're going to report earnings coming up. I'm sure they're going to go a little bit higher. When they do, if you own them, I take some profits here. Right, guys? Thanks for the background. Thank you for the compliment about the haircut, which is kind of like a half-ass haircut. Anyway, because all the barbershops are closed, so I had a friend do it. So thank you for the compliments, and feel free to email frankcurzioresearch.com. And as always, I'll report back to you guys soon. Take care.